Joining us right now is the Wipro CEO, Abid Ali Neemuchwala, who joins us right here in Davos. Thank you very much for being with us, and on your insistence, we'll keep you warm inside. Wipro has just reported quarter results. Yes, things have improved and things are looking up, but the growth rate is still below the peers like TCS and Infosys. When do we see Wipro revert to industry growth rates?
So Supriya, thanks for having me here in this wonderful Davos, and I think I'm very satisfied with our results this quarter. And if you look at the trend last couple of quarters, I think before you look at year-on-year rates, you should look at the quarter-on-quarter growth rates, and I think we're starting to do well. We have both have a good pipeline. We've got a good set of deals that we've won, and we're executing on it. So I don't give a timeline, but you should look at our performance and then tell when we are at industry leading and industry matching growth rates.
You also complete 3 years as CEO next month. What would be some of the big achievements of the year, of the last 3 years, this tenure, and what would you believe are issues where you could have done better?
So I think the greatest achievement is, as you take over a company in an industry which is in transition, being able to lead both the Wipro specific transformation as well as the industry transformation. Today, amongst our peers, ITSMA has talked about us being the top 5 digital brands in our industry, which is a great achievement. Our digital revenues are almost now 1/3 of our overall company revenues. I think as we restructured some parts of our business which don't belong to the future, like we divested our data center business, we restructured our India business, we combined our Middle East business with the global business, and all of those have started delivering results and good growth rate. I think our customer satisfaction is at an all-time high. So now we have the capability through the acquisitions and building internally things like design, things like cloud, things like cyber security, some of the new age services like what we got from Appirio in Salesforce and others. We have the capability, we have customers who are buying from us, we are executing quite well. So I think those things have gone well. If I look back, can some of these things be done faster? Can the pace? We looked at India business for a couple of years before, 2 quarters back, we decided to restructure it. Could have done it a couple of years back. So I think, you have to prioritize, pick one thing at a time and then address it. I'm very happy with what we've been able to address.
To be the devil's advocate, they say hindsight is 2020, so one will grant you that. But the biggest challenge for you has been predictability. There have been factors that have been very volatile, be it bankruptcies that have come up, or healthcare segments that have really been disruptive, or the rejigging and restructuring of the India business. What's the way forward in building a more predictable, a more stable business, really?
So I think apart from what you would have metrics in terms of revenue growth and margins and order book and others, one of the things that we are internally quite focused on is what we call as the quality of revenue. I think quality of revenue looks at balance sheet items like unbilled revenues, collectibles, how we address clients who may have credit rating challenges and stuff like that, to make sure that on a sustainable basis we don't surprise markets with, as you said, volatility or unpredictability. So we've, I think, come quite far. Just to give you one data point, about 7 or 8 quarters back, we were more than 27% of our quarterly revenues were unbilled revenues. This quarter we reported about 13%. Our operating cash flows are ahead of our revenues and billing. So some of those things impact the balance sheet and creates a more healthy, sustainable enterprise.
I think one is curious to know about your healthcare vertical. Is there sanity in there? Is the worst over? How are you assessing that vertical in business?
So, the core of our healthcare vertical is very strong. I think we have market leadership in the areas we work in. What has been a part of that business, which is the health plan services acquisition that we did, which supports the Obamacare business, has been the Achilles heel, if you will. And there isn't predictability yet on that part of the business. Now, over the last 2 years, we've had a revenue drop of almost $270 million to roughly about $110 million. It's a very significant amount of revenue hit, and then some of the amortization acceleration, etc., that we've taken. I think in the next couple of quarters, we will at least hit the bottom. And after we hit the bottom, then we just have to... I still believe a lot in the domain expertise, the platform.
So you do believe there is some more pain left?
Yes.
Okay. Fair point. What is the sense you're getting from clients as far as spends this year are concerned? Will 2019 be a better year vis-a-vis 2018?
So I think customers are doing digital at scale. We've got our fair share of customer wins where they're doing. But with some of the macro uncertainties, we are being a little watchful. If you look at some of the US banking results recently, the uncertainty around Brexit, if you look at the trade issues that are going on. But we've not seen any direct impact right now. So I would say I'm quite optimistic and we are watchful.
One of the things that I think the industry lauds you for is your efforts to localize in the US. You've hired a lot of talent there. But experts also point out to the fact that finding mid-level talent has been extremely difficult. A, is that true? And B, how has it really impacted costs? Have your costs kind of jacked up in a process?
Yes, so fortunately about 3 years back when I took over, we made localization as a strategic imperative and we were ahead of the curve compared to some of our peers, and that has worked well for us. So at that time we were able to hire mid-level talent, and then we moved to the model that we've learned to do very well in, which is hire campus recruits and then build the talent up. So I think that has worked well. Of course, as you remember, when we started on this, we did take a little bit of margin hit because this needs investments, and we're kind of done with those investments. Now it has become a part of our operating structure, our cost model, and now we are able to deliver margin expansion because it's become a way of life. Now, mid-level talent is still short, especially in our large markets, whether you look at US and UK and Australia. But I think by building talent and cadre locally in the markets and having established an employer brand ahead of our competition, we do well over there.
Quick last question. HCL recently acquired IBM's product business for about $1.8 billion. You've been very acquisitive yourself in your tenure and otherwise at Wipro. Any big deals in the pipeline, and will you be looking at mega acquisitions?
So we continuously look at acquisitions. We are not shy of acquiring, as you rightly said, when we find the right deal and when we find a strategic fit. We have a strategy clearly outlined. We've got white spaces in our strategy, so we know what we want to go and buy. And when we find an asset that meets our requirements of strategy as well as price. Now, sometimes in a very overheated market, you don't get the right price. So that's why we've not been as acquisitive in the last year as we were a couple of years back. But yes, anytime I find a good deal, you will find us.
So it's more white clouds versus blue ocean acquisition that's happening. Thank you very much, Abid Ali Muchwala, in conversation with us right here at Davos. That's the Wipro CEO talking to us.